On Wednesday, Asian stocks slipped as investors awaited the U.S. Federal Reserve's announcement of its decision on interest rates. China's factory activity contracted for the third straight month in July, which added to the negative sentiment. The official Manufacturing Purchasing Managers Index for July came in at 49.7, down from 49.4 in the previous month. Meanwhile, U.S. President Donald Trump said in a series of tweets Tuesday that China is not keeping its promise of buying more U.S. agricultural products. For its part, China insisted that it has bought U.S. agricultural products. European equities recovered from heavy losses on Wednesday, but markets remained cautious ahead of the long-anticipated interest rate cut from the U.S. Federal Reserve. The FTSE 100 was down 0.4% after disappointing results from the UK's biggest mortgage lender, Lloyds Bank, and wealth manager, St. James's Place. Meanwhile, Credit Suisse and France's largest bank by assets, BNP Paribas, revealed strong earnings. On the data front, inflation in the Eurozone cooled to 1.1% in July, well below the ECB's 2% target, while GDP grew by just 0.2% in the second quarter. On Wall Street, the Dow and the S&P 500 registered their biggest daily percentage drops in 2 months on Wednesday after Federal Reserve Chair Jerome Powell dampened expectations for further cuts following the central bank's first interest rate cut in a decade. All three major U.S. stock indexes ended the session lower, and after Powell said the move was not the beginning of a lengthy rate-cutting cycle. At that, despite the sell-off, all three indexes posted their second straight monthly gains in July, closing the book on a month in which the S&P 500 and the Nasdaq reached fresh record highs. Policymakers, led by Fed Chairman Jerome Powell, voted 8-2 in favor of a small cut in the federal funds rate and recommitted to their promise to act as appropriate to sustain the country's economic expansion. The Fed also announced plans to end the reduction of its $3.8 trillion asset portfolio effective August the 1st, 2 months earlier than previously expected. Policymakers in the statement said they would continue to monitor incoming data and would act as needed to support the economy. The Dow then pared some of its losses after Powell clarified that he meant the Fed could cut rates again soon, but the cycle of cuts wouldn't last for a long period of time. However, the sentiment remained negative in general. The dollar derived an impressive support from the Fed's statement, which was not as dovish as expected. Against this backdrop, Euro-USD slipped to more than 2-year lows around 1.1030 after an abrupt break below the 1.11 handle. The pair remains under the selling pressure on Thursday morning. In commodities, oil prices skidded on Wednesday after the U.S. Federal Reserve dampened hopes for a string of interest rate cuts, and Sino-U.S. talks ended without apparent progress toward resolving a bitter trade dispute. Brent crude futures fell over 1% and have settled marginally above the $64 figure since then. The drops came despite a bigger-than-expected decline in inventories in the U.S. and a drop in crude production among OPEC members. U.S. crude oil stockpiles fell for the 7th straight week, declining to their lowest levels since November, even as production rebounded and net imports increased. According to the Energy Information Administration data, crude inventories fell 8.5 million barrels in the week ended July the 26th, while output rebounded to 12.2 million barrels per day from 11.3 million BPB a week earlier. Now investor focus shifts to the Bank of England's Super Thursday and PMIs from major economies, while on Friday, the US reveals its key job report. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.